Today we're looking at New Fortress Energy Incorporated, ticker symbol NFE, a company that has quietly positioned itself at the crossroads of global energy infrastructure, liquefied natural gas exports, and even the rapidly growing AI data center power demand. Despite trading around just a few dollars per share, the story behind NFE has layers of strategy, political alignment, and hidden potential that most investors are overlooking. Let's break down why this company has become one of the most talked about speculative plays across professional analysts and retail traders alike. Understanding what NFE actually does. New Fortress Energy, or NFE, isn't just another small-cap energy company. It's a vertically integrated energy infrastructure business. That means it doesn't only sell natural gas, it also owns the facilities, pipelines, ships, and power generation assets that transform and deliver it. The company's focus is on liquefied natural gas, or LNG, which is natural gas cooled to a liquid state, so it can be transported easily across the world. LNG has become a cornerstone of global energy security because it allows countries to import cleaner energy without depending entirely on pipelines or domestic production. NFE's strategy has been to build and operate LNG terminals in emerging markets that need power. Regions like Brazil, Jamaica, Puerto Rico, and Ireland, and connect those terminals to nearby industrial or power generation projects. By doing so, NFE creates long-term, contracted revenue streams that can last for decades. But what makes NFE's story fascinating is not just what it builds, it's how it finances and manages risk. The mind behind NFE, CEO Wes Edens. At the heart of this company is Wes Edens, the founder and CEO. Edens isn't your typical energy executive. He's a former hedge fund manager who co-founded Fortress Investment Group and previously worked at BlackRock. He's known for structuring complex deals, managing leverage, and turning distressed assets into profitable enterprises. Wes Edens also happens to have deep political and financial connections. For example, he once helped restructure a major real estate loan involving Donald Trump, forgiving over $100 million in debt. This isn't just a random anecdote. It matters because it places Edens inside a network of powerful decision-makers who have historically supported LNG development and deregulation in the U.S. now, with the United States once again signaling a return to a pro-energy, drill-baby-drill environment. Many investors believe NFE is well-positioned to benefit from faster approvals, fewer regulatory barriers, and a political climate that supports LNG exports. In fact, during August 2025, the administration removed most of Puerto Rico's Federal Oversight Board, the same board that had previously resisted NFE's major LNG deal. Within weeks of that change, NFE announced a 7-year, $4 billion supply agreement with Puerto Rico. That timing wasn't coincidental, and investors took notice. The Puerto Rico deal. Let's talk about this contract because it's central to NFE's current valuation debate. In simple terms, NFE secured a $4 billion LNG supply agreement with the government of Puerto Rico. This contract would provide stable revenue for several years and help the island transition away from expensive oil-based generation toward cleaner gas-fired power. However, the deal is still awaiting final approval by regulatory authorities. After its announcement, NFE's stock price surged, but later gave back most of the gains as traders grew impatient. Many retail investors now believe approval is imminent, given the political support, but the market has priced in skepticism. If the deal receives final approval, it could instantly validate a significant portion of NFE's future revenue stream, possibly enough to double or triple cash flow projections for 2026 and beyond. That's why so many traders are calling this one of the most asymmetric risk-reward setups in the small-cap energy space. The data center division, Klondike Power. Beyond LNG, and NFE is quietly building something much more futuristic. Its data center energy subsidiary called Klondike. Klondike Power controls over 1,000 acres of land across Brazil, Ireland, and the United States, already equipped or permitted for gigawatt-scale power capacity, fiber connectivity, and water resources. In other words, these sites are shovel-ready for large-scale AI and cloud computing customers. Management has stated that they are in active discussions with hyperscale clients, meaning the likes of Amazon Web Services, Google Cloud, or Microsoft Azure, to provide the massive energy backbone those companies need to power artificial intelligence workloads. When you consider how much attention and capital is currently flowing into AI infrastructure, the Klondike division could easily become NFE's next major growth engine. The market hasn't priced that in yet, because no contract has been publicly announced. But even one hyperscale partnership could redefine NFE's revenue base overnight. The Green Hydrogen Division Zero. Alongside Klondike, NFE operates its Zero Division, which focuses on carbon-free power solutions and hydrogen production. According to recent updates, Zero is already engaged with over 140 companies, evaluating more than 100 hydrogen proposals, and running multiple proof-of-concept projects. If even a small percentage of those proposals convert into full-scale contracts, NFE could have exposure to one of the fastest-growing segments of the clean energy transition. The combination of near-term AI data center power and long-term hydrogen opportunities makes NFE uniquely diversified across two massive future industries: energy infrastructure and sustainable technology. Pending projects and catalysts. Several projects are currently in advanced stages awaiting final approval or announcement. First, the Puerto Rico deal, which we've already discussed. It's been communicated officially, but investors are waiting for the last signature of approval. Second, a $1 billion agreement involving Genera Puerto Rico, a subsidiary of NFE. An official government-signed document dated October 31st surfaced on social media, yet the company hasn't confirmed it publicly. That's another potential near-term catalyst. Third, the Louisiana Fast LNG project. It's expected to convert roughly 145 billion cubic feet of gas per year into about 2.8 million tons of LNG, potentially generating more than $600 million in annual operating income once operational. That project is still waiting for government approval, but political momentum around LNG exports is turning positive again. If the US greenlights this project, it would immediately shift NFE's outlook. Each of these pending deals represents significant optionality, meaning they could meaningfully increase future cash flow without much additional capital investment. Analyst forecasts. Now let's move to the numbers. Analysts expect NFE's revenue to grow by approximately 43% in the next year, from about $2.25 billion to $3.22 billion. Of that, Net income is projected at around $250 million. To put that into perspective, the company's entire market capitalization right now is barely $350 million. That means the company could theoretically earn back most of its market cap in a single year. Translated into valuation terms, that's a forward price-to-earnings ratio close to 1. It's extraordinarily rare to see a growth company trading at that kind of multiple, and it usually signals either a deep misunderstanding by the market or excessive fear about future risk. Analyst's average price target for NFE sits at $4.39, implying more than 200% upside from current levels. The highest target among them reaches $8.93, representing a potential gain of more than 500%. Importantly, none of those estimates include the possible upside from the yet unapproved deals. The Puerto Rico contract, the Genera subsidiary project, or the Louisiana El Raya LNG expansion. If those materialize, actual fair value could be even higher. Recent developments over the past few months, NFE has made several strategic moves to strengthen its balance sheet. First, the company sold its older, non-core assets in Jamaica for about $1.06 billion. This sale not only improved liquidity but also simplified its portfolio and reduced leverage. Second, management has announced plans to use a UK-style debt restructuring scheme to coordinate repayment and refinancing, a sign of financial sophistication rather than distress. This approach allows NFE to push out maturities while avoiding a company-wide restructuring. Third, the company celebrated a milestone at its Celeba 2 power plant in Brazil, which will generate approximately 624 megawatts of power when it goes online later this year. That project will soon convert heavy construction spending into steady, contracted cash flow. Additionally, NFE has started shifting to asset-level debt financing. This means that if one project underperforms, only that specific asset's cash flow is at risk, not the entire company. That change significantly reduces the chance of a full-scale bankruptcy and improves financial resilience. Market dynamics and short interest. Now let's discuss why NFE has also become a hot topic in retail investor circles, particularly on Wall Street bets and penny stock forums. The short interest in NFE has surged to approximately 47% of the float, an extremely high figure by any standard. Borrow fees for short sellers have jumped from 16% to over 23%, meaning it's getting expensive to bet against the stock. The days to cover ratio is around 2, which means it would take about 2 full trading days of average volume for all short sellers to exit their positions. If a major catalyst hits, for example earnings, a project approval, or even a rumor of a new deal, short sellers could be forced to cover quickly, triggering what's known as a short squeeze. In such a scenario, prices can spike dramatically within hours. That's why many traders on Reddit call NFE one of the best short squeeze setups in the market right now. However, it's crucial to emphasize that short squeeze setups are speculative. They can generate quick profits, but also large losses if the stock doesn't move fast enough. That's why this remains a high-risk, high-reward trade. Valuation and turnaround thesis. Let's put this together. At around $1.30 per share, NFE trades at a price-to-book ratio of just 0.28. That means investors are paying 28 cents for every dollar of tangible book value, an unusually deep discount for a functioning infrastructure company. The company's management has even discussed the possibility of reinstating a dividend in 2026, around 10 cents per share, which would represent a yield of roughly 30% at today's prices. That's almost unheard of in the current market environment. Combine that with improving project execution, debt reduction, and potential approval of pending deals, and you have the makings of a classic turnaround play. This is not a pump and dump. It's a speculative value play backed by real assets and real management credibility, but it requires patience and risk tolerance. If the turnaround gains momentum, large hedge funds could step in to accumulate shares, which in turn could ignite the short squeeze that retail traders are betting on. Earnings outlook. The next earnings report is expected around mid-November, likely between November 12th and 15th, based on last year's schedule. Analysts are forecasting a quarterly loss of about 76 cents per share, but expectations are extremely low. That sets the stage for potential positive surprises. Even a modest revenue beat or an update on project approvals could change the sentiment dramatically. The bar is set low, and the risk-reward profile around earnings is asymmetric. In other words, the downside appears largely priced in, while the upside could be sharp if the company delivers any good news. Key risks. No analysis is complete without addressing the risks. First and foremost, NFE carries significant debt even after asset sales. While management is handling it intelligently, leverage always adds volatility. Second, regulatory approvals are not guaranteed. Delays or denials in the Puerto Rico or Louisiana projects could push profitability further out. Third, short squeeze setups attract speculative traders, which can increase price swings and sometimes detach the stock from fundamentals. And finally, global LNG pricing and interest rates remain critical external factors. If energy demand weakens or borrowing costs rise, NFE's margins could remain compressed. The big picture. Despite these risks, the overarching narrative is compelling. You have a billion-dollar infrastructure company trading at microcap prices. You have a CEO with deep financial experience and connections in both political and corporate circles. You have multiple multi-billion-dollar contracts pending approval and real assets generating cash flow in multiple countries. At the same time, the market has priced NFE as if bankruptcy is inevitable. Yet the company continues to sell assets, restructure debt, and move projects forward. That disconnect between perception and reality is what creates opportunity. In the short term, traders are watching for a potential short squeeze. In the long term, investors are watching for execution, the turning of projects into profit. Both paths could lead to substantial upside from current levels if things go right. Conclusion. So, what's the bottom line? New Fortress Energy represents one of those rare cases where deep, fundamental value meets explosive, speculative potential. On one side, you have tangible assets, signed contracts, and a credible management team. On the other, you have extreme short interest, low valuation, and multiple near-term catalysts that could act as ignition points. If the Puerto Rico deal is approved, if Klondike announces its first AI data center customer, or if the next earnings show it even a hint of stabilization, this stock could reprice quickly, not gradually but sharply. At the same time, investors should remain aware that risk is high, debt is heavy, and execution is everything. This is not a stock for everyone, but for those who understand the asymmetry, It could be one of the most interesting plays of the year. Thanks for listening to this extended analysis of NFE stock, New Fortress Energy Incorporated. If you found this breakdown helpful, make sure to follow for more deep dive pre-market and post-earnings analyses. As always, stay rational, stay informed, and trade safe.